Good afternoon, traders. This is Christian from Traffic Trade Group, and it is Tuesday, September 4th, and this is your end of day recap. Risk disclaimer in front of you. Please read through this. Everything that we're going through here is for information purposes only. And if the screen is a little bit blurry, it's just because YouTube has not finished rendering the high definition version of the video, which takes some time. Okay, so let's get into today's price action. Clearly, another deterioration throughout the session. We've now seen this. I believe it has been every day this week. If you want to look at the bottom left of your screen, the breadth was disgusting, basically, for today, and that was the case around 12 o'clock when I sent out the midday video to members. I was noticing how bad the breadth looked then, and we just kind of saw that word that I like to use, deterioration of the market participation as we got through the end of the day. My main message in midday to members was, hey, take profits. This is the situation. I use a few expressions quite frequently, but they really do fit. When the market breadth is doing this, right, when you have 28 declining names versus 2 advancing names for the Dow, and if you go through the S&P and through the Nasdaq, you see the same thing. I refer to this as the wind is in your face, right? Versus when market breadth is expanding, when you have more advancing names versus declining names, the wind is at your back. So the other example that I use is if you pick 10 stocks and you don't have any edge at all, and you've got that many more names declining versus advancing, you're going to have a tougher time, right? Because that's just the market climate that's going on. So, if you do have some edge, you can improve those numbers a little bit, but still, you've got something like this, 28 declining names versus 2 advancing, and if you're playing the market mostly to the long side, these are very difficult markets to trade. So, what else? Well, without, I've been saying these things till I'm blue in my face, and I think most people are too. It's just that September is difficult, and we're seeing more distribution, right? And you just kind of have to let that play out a little bit, right? And patience, right, is the big factor right now. This is what it is, right? When the market has, from time to time has more difficult periods of the year, sitting on your hands as best as possible and not getting overexposed. And if you're flat, you're doing good right now. If your P&L and your trading count is flat, if you're up right now, you're doing very well. So give yourself a pat on the back if you're really managing very well, because you have to manage, you have to be very active in taking positions off into the strength, and then not kind of getting caught up with adding any more exposure. Even if you're like, hey, I'm up, that's how I was today. I was like, hey, I'm up pretty decently for the day. But I don't take off all my exposure, and for those positions that I have on, they just kind of felt like a deterioration, as well as not only in market breadth but my P&L over the session. So patience is key, and that's fine. I'm making it through September, even though what is the S&P right now for the month? Why don't we see what that is, just to kind of give a glimpse? Because even though the S&P was down, what, 0.5% today, we're not like, these days are not, they're not complete washout days. They're just kind of a grinding type lower. So if we go to the beginning of the month, 8/31/2021, and we'll look here to the right of our screen, we're down 1.6% for the month. So I'm still positive for the month. So I view that as a victory, because I'm mainly playing things on the long side. I had a hedge in place last week. I took that off, and have just been trading pretty disciplined and taking any losers off. The other thing to which I talked about I'm repeating myself if you're a member and you heard this earlier, but just to realize, like, if you have a couple losing trades, right, that's par for the course right now. You're not going to have all winners right now, or close to all winners. So if you do have those losers, it's important that you manage them well. I had tried a trade in Las Vegas Sands, just thinking that it was due for a rebound, and it just kept on pushing lower, and I'm like, well, I'm out of it. I'm just not going to. Right now in this market, it's not the time. I mentioned patience with kind of sitting on the sidelines, but it's not patience is not good with holding losers right now, in my opinion. Right, and again, I'm not giving any advice here, but in my opinion, if you have a couple losers, it's smart to get out of them pretty quickly, right, and not let them continue to grind lower, which is what a lot of areas of the market are doing. Right, so the market's down 1.6%. That's what the SPY is. The Qs are down about 1.2%. We'll go through some of those technicals. Before I do that, just looking at the overall numbers again. IWM down 1.6% from the open. IWC microcaps down 1.9%. The Dow 1.1% from the open. So again, it really helps to have some strategy, and buying the open is not the right thing right now. Bonds were strong all day long. They finished up 1.2% for the day. Gold, silver, they were up a little bit. Interesting, before we go into the S&P, which I will spend some time doing that, look at the VIX. Really not doing much. So it's kind of a little bit of a question mark right now. You've got a couple inside days. So I can't really make any confirmation, right? An inside day is basically just it's no change in trend since we had that big move that big move on what Friday was that? Right, Tuesday, Monday, Friday, of course. So, we had this big move up in volatility from the lows that got us to around, 21? And then we've had 2 inside days. So normally I would say, hey, this is good. Volatility is like not even moving, right? Remember, the VIX is just all it's measuring. It's not looking at IWM. It's not doing any of that. It's just measuring what the implied volatility is of short-term options in the SPX. And right now we're not seeing it really leap higher. You would think, like so when I say when you would think, if somebody told me, hey, if you're not looking at the VIX, where would you think it would be? And I would think around 24. I would think 23, 24. But right now it's underneath 20. So either like one of two things here is that being that these are inside days, maybe we get that washout day one day this week because we still have a few days before quadruple witching, or there's just not, and it's one of these things where we just kind of have to get through some distribution in the market. And again, I'm using that term a lot, distribution. It's selling. So, for example, if you kind of look at the S&P, we've now touched the 50-day moving average. Note that we've touched the 50-day moving average in May, June, July, August, and we've now done it in September. So another month. So if we go to this 1 hour chart, which I've been using a lot, I mentioned in yesterday's video that we took out this virgin point of control. There was one remaining. There isn't another one down here for a while. So we've taken out a lot of these. They're kind of like, they're not exactly like gaps, but people like to think of like, oh, a gap eventually gets filled, right? It's kind of like that. We're back tracing where we rallied and where there have been, so here's a virgin point of control from here where we just blasted through, and went higher here. Same thing with this one too. So we've now taken those out. The pattern here, so regardless of the virgin point of controls being taken out, which I think is a good thing, right? To have these levels now gone because they could be reversal points, right? Again, nothing is 100%, which I said in yesterday's video, but you could see the previous ones that have been taken out. Here, let me just change the screen a little bit, so because Thinkorswim likes to mess around. But you could see the previous ones, right? We had 2 1 hour ones taken out back in July, and then we went a little lower, and then we had a reversal. We had them also taken out, 2 of them taken out back in August, right? One here, and then the last one, I mean, literally down to the tick, and then a reversal. So we have had that bounce, but we're back lower. So that's a little bit concerning. So one of the things that I would watch for, right, no crystal ball stuff here, is just notice this pattern, right? We rallied up here right before the open, so that was the high of last Thursday, right? Also, the open was the high of last Friday. The high was the open on Monday, right around 8 o'clock, 9 o'clock in the morning. And the same thing today after the CPI numbers. So what is this telling you once the market opens? It's telling you that there's some sellers in this market, right? There's somebody out there, institutions, who are trimming their exposure right now, right? And they're doing that obviously during the market hours. So we have to get out of that pattern of making lower highs. So basically, since this happened, there's a lower high here, lower high here, lower high. And again, they're all happening around the open. So one thing just to point out here too is that is the relationship over time. You could Google that, right? The after hours market over time, like if you go back to like 1980, right, and look at the performance, I know it's a long time ago, but if you go to the performance in the overnight market, it is much bigger performance when you buy the close and sell the open, right, versus the other way around. But it's been really heightened this week. If you're coming in and you're buying the open, you're getting slaughtered right now and selling the close, right? So that relationship does hold up over time, but it's really extreme this week. Okay, that's just the point that I wanted to make. So we almost did it. Like, this is the first day that we kind of got a little bit over the 20-day moving average around, right around the open. But you could see there wasn't much doubt after that. So that has to change, right? We need to get over this. Right, and then maybe we can kind of turn the corner and do something different. But again, the main word here is patience, right? And the 5 minute. So I mentioned this. Just give Thinkorswim a minute to get through. But I did cover this in yesterday's video that we had a downside VPOC around this 44.30 level, and you should see it appear now on your screen. So I thought that had to be taken out. It was taken out. So again, it just makes it more, for me, like another box to check, like a higher, right? The market's always about probability, right? So for me, now that these things have been taken out, there's a little bit of a higher probability that we could reverse sooner than later, right? If these things still linger, then there's less of a probability that I think that we could reverse and start to go higher. All right, so there is one still in the NASDAQ too. Right, it was very close to being taken out on the 1 hour chart. So this is NASDAQ futures. Right, we almost got there yesterday, very close. I hope this gets taken out in the overnight market. So that's still hanging around. All right, so again, we're very close to that. That could easily come off in the overnight market. And again, I would prefer, rather than us move up 20 or 30 basis points in the overnight session, I would rather see us open up down tomorrow. Remember, this market too, you have people that have maybe been selling a little bit. You get to a lower enough price, and prices become more desirable, right? There's more demand, right? And it's always demand, supply, right? So, there could be, you get to lower prices, people start to come out and say, hey, I'm interested in buying here. We've come down enough, for a week. Another point to mention too, now all these things they seem to be kind of lining up, right? Tomorrow at the close marks the Jewish holiday, right? So it's the expression that you hear a lot on Wall Street. You sell Rosh Hashanah and you buy Yom Kippur. That's tomorrow. So, again, I'm not saying that these things are 100% guarantee, but they are kind of lining up. Like, I would like that VPOC being taken out. All of those VPOCs, version point of controls, have been taken out on the S&P. So it would make sense that a rally would be coming, or a decent bounce. Sorry, I shouldn't say rally, but a decent bounce. Even still, like, we get a bounce, you still have to be selling a little bit into the bounce, in my opinion, because the rest of the month isn't crazy, in terms of seasonality. So, again, it's just one of those things that you have to get through. One of the things that I also talked about, how many times am I saying that? Sorry, is that we could be setting up too, if you kind of have to just get through September and get through October. And then maybe we can see an end of year rally too. Once we have a little bit of a dip/correction in the market. I'm not sure. I wouldn't call this a correction yet in the market. I would call it a dip, and a normal dip that happens around this year. So if you're anxious about this price action, or if you're hearing things like I had on one of the TV programs earlier, and they mentioned like, well, this is not a market crash, and I'm like, don't use that term. That, this is normal for the market to be going up and to be going down. It's always a little bit painful, especially when, in this case, this week you rally pre-market, then at 9:30 it just gets hammered for the whole session. So yeah, it's painful to deal with. But is this normal? Absolutely, right? And this is just part of how the market works. So, like I said, if you're anxious, or if you're a newer trader, over the last couple of years, if you started in 2020 or if you started in this year, this is just how the market works. It goes up and it goes down and it cycles through. So you just kind of have to get used to that. It is a bit of a pain in the neck when this happens for like a week or a few weeks long. Could be a few weeks longer. Again, the chart that I think really kind of puts things in perspective is when you look at what the S&P did back in September and October last year, right? So here's where we were. Again, almost the same exact time. Now we weren't as overbought, so this was a heavier sell-off, and then we hung around. We bounced a little bit, and then we went lower. So this was we basically sold off for the whole month. You're right into that options expiration, right into that quadruple witching in September. Then we had a healthy bounce. And then we kind of moved down again, but again, realize what happened there. Once you got through all of this, look at what happened. Look at what ensued afterwards. So the whole thing with this is to try not to really get caught up too much in here. Try not to give too much of your profits back. And if you do give a little bit of your profits back, it's not a big deal, right? So one other point to make is that we are continuing to see. This should also kind of clue you into what's going on. There's all these secondaries going on, right? There are selling shareholders, blocks of stock that are going up, right? The institutions are selling right now, so that has to stop, and we're still seeing that. There's just another one I just saw hit the tape. Live Nation offers stock. Right, so another $450 million stock offering. So people are still selling. So even though it's been a few days of this, right, the institutions, I know like there's been a whole retail force that's happened over the last year, but for most stocks, unless you're talking about these penny stocks that retail investors are in love with, for the bigger stocks, the institutions control them, right? So if you continue to see more block trades, they're not done lightening up their exposure, right? But we've been seeing that just about every day. We're seeing a ton of these secondaries. Okay, so next thing I do want to see, I discussed this a little bit yesterday too, but the put call ratio, let's see what it is. Like I was a little bit discouraged when I saw that the put call ratio was equity put call ratio was a 0.46 yesterday, right? That is showing complacency, right? I want to see this thing get back above, around 0.6. Remember last year as a guide, not last year, last month, when we reversed there was fear, there was a little bit of fear in the market, right? The equity put call ratio got to a 0.6. We're not like, it's kind of just ho-hum, complacency. And that's kind of the same thing with the VIX, just not over 20 right now. Got to see a little bit more fear in the market to reverse, right? Got to get like a washout in the market. All right, so that's a lot to talk. I mean, when we have things like this where the majority of stocks are moving down, I tend to focus more on the indices. I will say this, that there is some technical damage being done in things like the financials, not yet, but we are starting to see more sectors lose their strength. Like look at the transports, for example. All right, that looks pretty ugly. The industrials breaking below value in the 50-day moving average. The materials are close. They're a little bit stronger, the industrials. So if you look at retail too, I had a trade that expired last week, unfortunately, where I was short, I was long a put spread and the damn thing expired. So But like we are seeing some more weakening in the technicals. Not everything. I mean, if you look at XLK, for example, even though Apple's a big portion of this, it's still kind of holding its own, right? Look at what the semis are doing, right? There was a number of stocks that did pretty well today. MDB, which is a name that I got long, closed on the highest today. So look at Crocs. Right now, this didn't close at the highs, but it looks like I would look for some follow through tomorrow on Crocs. I like this pattern a lot. So it's not all doom and gloom, and that's why I'm really stressing this word patience. You got to just get through this option expiration week, and maybe that Jewish holiday also starts something. One name I started to watch too is TJX. We saw some calls being bought. Look at how many red candles. This thing is ripe for a bounce. There was one green candle in here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 out of 12 days there was red candles, and I think this thing is at least due for a bounce up to like 70, 71, right? Or excuse me, like around $71. But yeah, finally there was somebody who was buying calls in this thing. Really weird because this thing rallied into earnings, had a good earnings report, and just has been beaten up pretty decently in this one. A few other names too, like again, just some names that had good earnings, or there's been momentum in DOCN, which is a name I'm still long. I did take my profits. So what I did, for example, I haven't really talked too much about how I traded today, but you can look at my trades here. INMD, I got long both stock and options. In this market, what I do is I take the options off pretty quickly when I get a winner. Right, so I was out of the options, still in the stock. I actually took an exit in the stock at 130. It closed at 127 because I just figure with this market I may be able to just get right back into this thing. So we'll see where it goes tomorrow. But I would be a buyer on weakness of that. I tried it. I mentioned I tried LVS. I lost some money on that one. Sorry if I didn't mention it. I did try that. Snow is another one that I tried, and I'm like, hey, I don't want to be buying things on the open. And as soon as I saw Snow go back below my cost basis, I'm like, there's no, I want to be a seller on the open in the first hour of the day, and not much else. This was another one. Like I tried adding a Netflix call spread. I think Netflix, which was really strong, has been coming into the 20-day moving average. It's fine, but I think maybe waiting to the end of the day would have been a little bit better because that name was weak throughout the session too. Tech Resources was a nice winner for me today. They announced that they might be selling, I think, part of their coal business or something like that. We saw, about a week ago, we saw a lot of accumulation in the February calls. So perhaps, someone was onto something with that. Nice move today, up 5%. I'll take it in a difficult tape like this. Also, a lot of uranium, like reloading of some exposure. This is Triple U. I think Triple U can get up to this 850 level, or sorry, Quadruple U. And then we also saw some buying in things like URNM. Weird that people are using this ticker, this URNM, which I have always watched URA, and I'm still long the URA after the VPOC was taken out. I'm looking for a move up to 29 ultimately, but we'll see how it goes. All right, guys, so that's it. Again, I talked a lot about like more or less strategy and some of these market internals and what we're seeing and some of the sector breakdowns, but there's a number of stocks that are holding up pretty well. Just kind of it kind of worries me a little bit because I don't want to be in a whole bunch of these high flyers. Some of them got hit a little bit yesterday and they snapped back pretty decently, but look at another one. Asan was up 5%. So, and a lovely break from that earnings push higher. So, again, my view is, and I'll just kind of give you my bottom line, is that just kind of have to wait till this transpires, and to kind of end this on a positive note. We just have to get through some of the seasonal weakness. But look at credit spreads, right? They're not showing any movement, or any alarm. This was very similar to what we saw last month too, right? When the market dipped, there was no big widening out of credit spreads. That also is in the camp of that, hey, this is a garden variety market dip and we just got to get through it. So for now, that's I'm being very conservative in here with what I'm holding, and I'm being patient for letting this go through because of course I could be wrong, but for now that's what I'm thinking, and that we just have to get through the seasonal weakness. Thanks for watching. Have a great night, everybody. See you tomorrow. And by the way, if you want to be a Tribeca Trade Group member, go to tribecatradegroup.com. That link is pinned to my Twitter page, and you can be a member and you can kind of listen to how I'm tackling these markets every day. Members get a midday video. I do go through position by position, in what I'm doing, at least every other day in terms of how I'm trading this market, and as much cash that I'm holding and so on and so forth. Which again, I'm still holding a lot of cash right now in this market.